Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today we are going to be taking a look at the price of Bitcoin. And we're also going to be taking a quick look at the price of Ethereum as well. As you know, if you have been following the channel, you will know that I am in a Bitcoin short position, and I'm not initially expecting the price to pull back as of yet, but I've started laddering into a short position, and of course I'll go over that again today, but I'm still initially within that short position, and I'm going to prove that to you as well. But I still think the price could maybe push a little bit higher before we then see that actual correction, which I am expecting, and obviously I'm going to talk about those levels as well, so make sure you stay tuned for that. If that sounds interesting, then please make sure you smash a like on this video, and we will jump straight on into the video. I also have some things to talk about with sort of potential recession as well, and something that is happening tomorrow, which is very, very important, and which is sort of the whole title of the video as well. Big crypto volatility expected within 24 hours, because we have some big news coming out tomorrow, and that will most likely move the price of Bitcoin. So I am expecting a big move right now, and I will talk you through that as well. Right now I'm expecting that move to be towards the downside, but of course the news tomorrow can heavily affect that, and we could potentially see a push towards the upside, so we will talk about that. But anyway, getting straight on into the charts then. Let's just say hello to everyone. Mr. New Creation, hello, good to see you back. And yes, I am still in a bearish position. I will prove that to you right now. So as you can see right here, I'm still within that short position. It is in almost a 5% loss. That is okay, because I am going to be laddering into this. I'm expecting this to be in a loss for a short while, okay, potentially even push a little bit higher, hit the limit order that I have up here. And then hopefully we can finally see the price actually go in my favor and see this trade turn into a winning trade. But as of right now, I'm just laddering into that short position because I'm still expecting a little bit higher, but also the price could actually see rejection from here. And I will talk about that now. So what we're looking at here is this range. Okay, we first started looking at it on the 4 hour. Okay, but over the course of Christmas and New Year's, we just continued to see this range being respected. So then we started looking at it on the 8 hour, and I just had it up on the 12 hour there. This range is very, very, very well respected on each of these time frames. Okay, and what I'm looking at right now is actually what I'm doing right now. Is that I'm actually shorting from this value area high here. So I'm looking, I'm looking for that confluence. I'm looking for reasons to enter into a short position. Okay, so we use this fixed range, which really helps us give an understanding of where the price of Bitcoin could actually go. So when we're at value area high, okay, like we were back here, we could be looking for a short position, okay, and again here as well, we could be looking for a short position, because we tend to see, okay, when the price is above value area high, we tend to see the price come down to value area low, and vice versa. So when the price is down at value area low, we tend to see the price come up to value area high. Now, you could use this in this trading tool just by itself. For me, that is not the way I trade, and that's not always the case. It's not always the case that we're going to see value area high to value area low, value area low to value area high. However, we want to look for confluence to help support that idea, and that's what I have been doing. Okay, so what I have in fact been looking at and looking for is some confluence to strengthen my thesis that I think, okay, and the thesis being, the price is going to have maybe a little push towards the upside or a rejection from where it is now, but initially having a rejection back down to this value area low at around $16,400. So that is what I'm expecting, and I'm still expecting that, which is why I'm still within this short position, as you can see right here. So reasons why I have entered into this short position is, firstly, because we're above value area high. Okay, so that's my first little bit of confluence. That's my first, that's the first indicator telling me to actually enter into a short position. But then, of course, we want to look for confluence as well. Okay, another bit of confluence that I'm looking at is, in fact, a very a very big, as I should say, a very big bearish divergence. Okay, so we're getting price action towards the downside, as we can see here, but we're also getting momentum towards the upside on the RSI. Okay, we're forming higher highs on the RSI, lower lows on the price action chart, and this is a textbook bearish divergence. And what we what most of the time we see from a bearish divergence like this is we do see the price actually retrace. Okay, so that's another bit of confluence as well, telling me that the price is most likely going to pull back. Okay, so those are two bits of confluence that I am actually looking at as of right now. For me, I tend to look for three bits of confluence. Okay, and another bit of confluence that I'm actually seeing right now is we're getting this golden pocket coming into play right here. So between 17,560 and 17,650, we do have a golden pocket. Okay, between the 0618 and the 066 Fibonacci level. This is a very strong resistance level. Okay, these tend to be very strong resistance levels and support levels. Okay, so from pulling them from left to right, okay, from bottom left to top right, bottom left pivot to top right pivot. Okay, this is support. Okay, and as you can see, we've used it as support right here when we have taken it. Let's just get rid of the RSI for a second. When we've taken it from the pivot low of the range to the pivot high of the range, okay, you can see that that has acted as support. That's acted as perfect support right there. So in the future, if we do see the price come down here, that is going to be a major support level. But for our case, okay, we're pulling it from the range high, which is here, to the next pivot low, which is right here. Okay, and this is bringing in this golden pocket right here, and this is going to be another level of resistance. And this is why I have another limit order in at approximately $17,600. Okay, because that is the next resistance level that I am looking at. Okay, and even above that as well, we have some more resistance levels in, which I have another limit order at. Okay, so $17,800. Okay, that is another area where I have a limit order. Why is that? Because we have a daily level there. Okay, if we come to the daily chart, we can see that we actually do have that next daily level being at $17,804 to be exact. So that is where I'm going to have another limit order. And, you know, there's a strong level of resistance right here. You know, the confluence isn't the best, as in you know, the levels aren't as close together as I would like them to be. But initially, you know, I'm still getting this confluence. It's still telling me that we're going to find very strong resistance around this level here, and most likely see the price actually pull back. Okay, so this is why, again, you know, this is why I'm entering into this short position, laddering into this short position. Okay. I do have another reason as well. You know, there's multiple reasons why I am entering into this short position. Okay, another one is actually on the daily chart. So when we come to the daily chart here, we can see the exact same thing. So looking at this daily chart, you know, we have this range once again. And, you know, if we bring up the RSI, we're forming a textbook bearish divergence on the daily as well. Okay, so lower lows on the price action charts, but higher highs on the RSI. You know, this is a textbook bearish divergence on the daily. So this is, you know, the probability of it playing out is actually 74%. And in one of the courses that we're going to bring out, you know, I've gone through this, I've back tested it, and I prove it to you that I've back tested this. And, you know, divergences 74% of the time they do in fact play out. So this is initially why I am short. Okay, now it's not necessary, I'm not, you know, telling you that the price is going to pull back from where we are now. Okay, this is what people some people don't really get. Okay, the way I trade is I ladder into a position. Okay, so I look at the resistances, okay, and I use those resistance levels to help put in my limit orders, my limit short orders, and vice versa for longing the support. Okay, the support is what I'm looking for to sort of put those limit orders in. Okay, what people don't, what people, you know, I see in the comments sometimes is that whenever I enter a short, the price will increase a little bit, and they'll tell me that I'm getting wrecked, and then eventually, you know, we might actually see the price pull back, which has happened before. You know, when was it? This was we had there was some news event that came out as well, and the price decided to pump, and I had my level set, okay, and I was already in a short position, okay. The trade was in a loss, obviously, because the price was pumping and I was shorting, okay, and then I saw someone comment that I was getting wrecked, but they obviously didn't watch the whole video throughout, because they would have seen that I had more limit orders above, okay, dollar cost averaging up that position. And then eventually we saw the price actually pull back and hit my target as expected, and we made a really, really nice trade there. I think that was a trade that was almost $4,000 in a profit. We took almost $4,000 in a profit, over 125% in a profit as well. So this is the strategy I use. Okay, it looks as though I'm in a loss now, and yes, I'm in a loss now, but I'm hoping to turn this into a win. Either we see the price reject from here, or we see the price come up and hit those next limit orders that I have, and then we see the price reject from there. So this is the way I trade, and just because it's in a loss now doesn't mean that it's going to be a losing trade. Okay, I like to ladder into my trades, because it gives me the best possible entry. Okay, if I were to just put my limit order in at the highest bit of resistance, we may not hit the highest resistance. Okay, that $17,800. We may not hit that resistance level where I do have a limit order there. Okay, so the safest thing to do is just ladder into a position. You get the best average. Get the best average entry, but also, even if the top limit orders aren't hit, okay, so say we get a rejection from here, at least I'm in a trade, okay, at least I'm in a trade because I've started laddering in. But we may not even hit this golden pocket here, or we may not even hit this daily level here as well. Okay, so this is why I like to ladder into positions rather than actually just enter at one specific price. Okay, I like to ladder in, and that is what I'm doing here. Okay, I've got my limit orders in. My next limit order is at $17,600, and then my next limit order is $17,800, and I even have a limit order at around $18,118, just in case we do see the price push all the way up here and then form some sort of swing failure pattern, okay, from this previous swing high here, okay, and then again we've got another major daily level up there as well at $18,461. Okay, so we have a lot of resistance above us, and because we don't have the confluence, as in the levels aren't all at roughly the same price, like I would like them to see. I'll just use these resistance levels as actual limit orders, okay? And this is what's worked for me in the past, so I'm going to continue to do that. Okay, what I mean by confluence, obviously we've got sort of two types of confluence. We've got confluence as in, three different technical tools telling us to enter into a trade, but also confluence with those tools as well, as in horizontal levels being roughly in line with maybe a golden pocket or a value area low. For example, here, this value area low is very, very close to that golden pocket there. So that is perfect confluence right there. Okay, this is what I'm looking for. Okay, unfortunately, in this scenario, we're not getting that. Okay, so what am I doing? I'm setting those limit orders at those resistance levels where I'm expecting the price to reject from. Okay, so this is what I'm doing. I'm still short on Bitcoin. Okay, as you can see, I'm in a short position as of right now, laddering into that short position, but initially I'm expecting the price to pull back to value area low down here, come down to this sort of major sort of support level here. We've got the POC, the point of control there. We've got the golden pocket there as well. We also have the value area low. Then we've got horizontal from this and this as well. I'm not going to draw that horizontal line in because it's going to be too confusing, but we do have a horizontal level coming in around there as well. So a lot of support around this level. And if we do see the price pull back to this level, it would be a pretty good longing opportunity. I'm not looking to short, okay, all the way to the bottom of the bear market. If that's the case, if we're going to see the price pull back, I'm looking to trade these ranges and have a little bit of capital left in within those trades to see if the price is going to have a major dump or if the price is going to have a major pump. Okay, so this is what I'm doing. Exactly the same with Ethereum as well. Okay, exactly the same story. We're still forming a very slight bearish divergence, but still initially a divergence. Sorry, one thing to add on the Bitcoin chart as well. Another thing that I didn't mention was RSI is very overextended as well. That is a signal for a pullback as well. But yeah, moving on to Ethereum, exactly the same thing. Okay, we have a horizontal level right here, which we tested to the dollar right there. Okay, we had a previous test to the dollar there and a previous test to the dollar right there as well. Okay, so this is a major resistance at $1,351. Okay, what else are we seeing? Okay, we're seeing a very slight, but initially a textbook bearish divergence. We have a high here, we have a lower high here, ever so slight lower high, but initially a lower high. And then on the RSI, we're forming higher highs as well. And the RSI is in very overextended territory. And then we're above value area high as well. So Ethereum as well is looking very, very good for a short position. And I am in a short position as well on Ethereum on my personal account. Okay. I'm shorting Ethereum, I'm shorting Bitcoin. Okay. Yes, maybe we could have for Ethereum, I wouldn't expect much more upside. Okay. I know we have a major fib level up here. Okay. But there's very strong resistance coming in at this horizontal level. So I wouldn't expect much more movement for Ethereum. And if we were to see another push up for Ethereum, okay, and we broke above this resistance, we pulled back, used it as support and bounced off that level, then yes, I would exit that short position on Ethereum. Okay, that would be my early exit. Of course, I've got 10% stop loss, but that would be my early exit for Ethereum. If we broke above that, because that's sort of the next, well, that's the final, major resistance that we have until the price moves, another $100 up, which in Ethereum is quite a big move. Okay, so that's what I'll be looking for Ethereum, but RSI very overextended as well, bearish divergence above value area high. The range hasn't broken yet. Okay, we haven't broken the range high yet. So for me, it's looking prime for a pullback. Okay, prime for a pullback, and that's why I'm shorting. Okay, that's why I'm shorting Bitcoin as well. But like I said at the start of the video, we do have a big day tomorrow, and I'll get onto that in a second. Solid win. Let me just see what you said. I'm short at 17,390 and also an order short at $16,600. Fingers crossed. Let's go short Bitcoin BTW. Yes, so we've got the same thesis here. I still believe that Bitcoin is going to have that pullback. And it's looking prime for a pullback right now. But as I said, yes, there is a possibility we could see the price push up. I wouldn't expect it to break above this daily level right here, but there is always that possibility. Okay, we have to think about what smart money is doing, and what smart money is doing right now, and what smart money does in these ranges like this is they tend to get everyone really excited, push the price up, okay, grabbing this liquidity from up here and then dump the price. Okay, so that's why I am actually dollar cost, that's why I'm averaging into a position all the way up to this previous high here, okay, because there's a possibility that we could come up here, have a swing failure pattern, and then we see the price actually tank from there. So, initially, this is what I'm looking at. Jimmy, how is MACD? To be honest with you, I don't look at the MACD, but I can have a look at it if that's something that you look at. Bollinger Bands, they're very squeezed on the daily. I already know that. So that's another signal that a big move is coming. But MACD, I've got it saved, I'm pretty sure. There it is. MACD, to be honest, I don't use the MACD much at all. I don't really use that. But, what are we looking at here? What are we looking at here? Okay, so, the MACD is coming pretty high. When it comes pretty high here, we do tend to see a pullback. You've seen it here. You don't really get the confirmed pullback until you see the blue cross below the orange. But yeah, for me, MACD, the volume is very, very low, and we're seeing the price push towards the upside. That is another signal to me that a pullback is most likely potentially coming, because with a push towards the upside, you need volume, and the same with a push towards the downside. Okay, you need volume for that. For that price to be pushed down. Okay, perfect example right here. Okay, we saw the price pulling back right here. Okay, but the volume was very minimal. Okay, again here we had a slight pullback right there, but the volume was very, very minimal. Okay, but we had this big pullback here. Volume is very, very high. You need that volume to come in to push that price in any direction. And as we can see, we've been pushing towards the upside here, but on very minimal volume compared to these pushes towards the upside where we were on very high volume as well. So you've got to take that into consideration as well. That's also looking fairly bearish for me. So the MACD again, it's bullish right now, but for me, it's looking like it's going to flip bearish. So that's just my judgment on it there. But yeah, just to get into sort of the new side of things, I solely based my analysis. I solely based my trades off technical analysis. But again, we do have to look at the fundamentals as well. And things that are happening right now is crisis is intensifying. Okay, World Bank warns of global recession in 2023. Okay, the World Bank warns of a global recession in 2023. That is not good for the markets, of course. So this is this is just another reason why I think we haven't seen the bottom of the bear market. Okay, I don't think we've seen the bottom of the bear market right now because we've still got a recession looming over our head. So that's not going to be good for the traditional market. That's not going to be good for the crypto market. So for me, I still expect lower for Bitcoin. I still expect 14,000. If we break 14,000, 12,000, and then potentially even 10,000 as well. Just before we continue, please make sure you all smash a like on this video. I would really, really appreciate it if you just smash that like button. It's free, really helps me out. And yeah, as I said, I would really appreciate it. But to continue with what I'm saying, Goldman Sachs is laying off as many as 3,200 employees this week. Okay, why are they doing that? Why are they laying off that many people? They're obviously scared of something. Okay, and what could they be scared of? Well, they could be scared of this recession. Okay, they're preparing for it. They're preparing for the winter. Okay, they are preparing by getting rid of employees that they necessarily don't really need, and saving themselves a bit of money because they know that this is really, really going to affect them. Okay, so we have to take this into consideration as well. Why are they laying off this many people? And it's not even just Goldman Sachs as well. Goldman Sachs, they're one of the biggest banks out there. So this is a very, very big thing, but also within crypto, Coinbase. Okay, Coinbase are doing the same thing. Coinbase announced Tuesday that it was laying off 950 people, about 20% of its staff. Okay, a 20% cut of its staff. They are they know something that we don't know as well. Okay, cutting 20% of their staff is a lot. Okay, is a lot, and they're preparing for the winter as well. They're preparing. What are they preparing for? They're preparing for this as well. The World Bank warns of a global recession in 2023. Everyone is going to be preparing for this now. Okay, because it is looking likely. It is looking very likely. We've had the early signs. One of the early signs, just showing you quickly, is the 10-year, okay, is lower than the 2-year. The 10-year yield is lower than the 2 years. The 2-year exceeded the 10-year. Okay, every time we've seen this in the past. Okay, this is every time the 2-year has exceeded the 10-year. Okay, and we see this when the orange line goes into the minuses. Okay, so goes below this black line here. That's when the 2-year exceeds the 10-year. I've showed you this multiple times before. Every time this has happened, okay, a recession follows shortly after. Okay, and a recession on this chart is this gray box here. Okay, so every time we've gone into the gone below the black line into the minuses, okay, that's when the 2-year has exceeded the 10-year. Okay, recession. Okay, recession after 1979. Okay, again here 1981, 82. Okay, recession after the 2-year exceeded the 10-year. Again, right here in, when is this, around 1989, 1989. Okay, we saw the 2-year exceed the 10-year. What happened in 1990 and 1991? Well, we went into a recession then. Well, not me, but everyone back then went into a recession. Exactly the same thing in the 2000s. 2-year exceeded 10-year. Okay, 2002, 2003 recession. Okay, exactly the same thing. 2006, 2-year exceeded 10-year. 2007, 2008, that recession occurred. Okay, and this is a bit lagged behind. As you can see right now, we would see that the orange line is below the black line, meaning the 2-year has exceeded the 10-year. And I can actually show this to you by coming over to the 2-year. So as you can see up here, this is the 2-year yield, US government bonds 2-year yield. And as you can see, this is 4.239%. Then we go to the 10-year US government bonds 10-year yield. Okay, and we're looking at that, and that is 3.578%. Okay, 3.578%, sorry, is lower than 4.241%. Okay, that means that is telling us the 2-year has exceeded the 10-year, and we're most likely going into a recession. And with the World Bank warning of a global recession in 2023, it's looking pretty likely that we are going to get that recession. So we're seeing these big companies, these big banks, prepare for that. Okay, but for tomorrow we do have a big event happening. Okay, core inflation rate year over year is being released, and the inflation rate year over year is being released as well. Now this is really going to affect our trade. Okay, because if core inflation year over year and inflation year over year, the inflation rate year over year comes in as forecasted or lower than forecasted, this is going to be very bullish for the markets. Okay, we're going to see the price of the traditional market and the crypto market pump. Okay, however, if we see core inflation rate year over year come in higher than forecasted, okay, and inflation rate year over year come in higher than forecasted, then we're going to see the markets dump, even if it's just a 0.1% higher. I think, okay, this is not financial advice, but I think that we are going to see the markets dump, okay, and this is going to be very good for the short position that we do have right now. So for me, if we do come in at forecasted, or we do come in higher than forecasted, I'm going to sort of take a step back from just solely basing my trades off technical analysis, and I'm going to look at the fundamentals right here, and I'm most likely going to close this trade probably in a slight loss if we do come in as forecasted or higher than forecasted. Okay, because that means that inflation is going to be coming down. And of course, that's a good thing. Once that happens, people can start moving. I wouldn't say will become risk on, but they will get closer to becoming more risk on. And maybe even some people will become slightly more risk on. Okay. However, if we come in higher than forecasted, this means that inflation is still not coming down as the Fed is expecting it to. And we're most likely going to see those markets continue to dump. Okay, so we've got to be aware of that tomorrow. And just to give you a heads up, tomorrow we will be going live just before 1:30. Okay, because we're going to be live. We want to be live whilst this data is coming out. We're going to take a look at the charts. We're going to have a look at how that data is affecting the charts, but also how it's affecting the trade as well. So we're going to have all of that live for you as well. Jimmy agreed, low volume sucks, lack of commitment, more confluence. Exactly, more confluence right there. Looking at that MACD, yeah. No volume coming in with that push towards the upside. It's not sustainable. It's like any pump. Okay, with any pump or dump, okay, you need high volume. If you don't get the high volume, then it's not going to happen. Okay, we're most likely just going to see the price become flat, or we're going to see the price go in the opposite direction. Okay, and this is what I'm anticipating here. That MACD, I don't tend to use it a lot. Have I deleted it? I think I did delete it, but I don't tend to look at that MACD a lot. Okay, but just looking at it now, it's not looking good. Volume isn't as I would expect it to be. This previous pump here, okay, volume was high, nice spikes in volume, okay, that continued that push towards the upside. Okay, and then even here, we came to the top. RSI came over. I don't tend to trade like this, but this is a way you can trade as well. RSI has come above 70. Okay, so we're getting close to a local top. Okay, MACD volume is decreasing. As you can see, volume is decreasing here on the MACD, getting lower and lower and lower each time, ever so slightly lower, but initially lower. Okay, this is a perfect sign for a pullback. Okay, and then we did see that pullback on high volume as well. So that's why we saw that big pullback right there. Okay. And we have seen a nice push towards the upside from value area low to value area high. That's a nice push towards the upside. But the volume just has not been there. We've not even seen any major spike in volume. It's just been pretty steady going along. So yeah, it's not sustainable. So I think we're coming to a local top here, and that's why I've entered into a short. Personally here, we're coming into a local top, and we're going to see a pullback back down to these support levels where we can then, I'm not short. I'm not completely short right now. I'm short locally. Okay. And then once we get down to these support levels here, then we can start looking at a long position back up to these resistances. Okay. So I'm only shorting these local tops here. Okay. And then longing the local lows, then vice, it just continues. Okay. Shorting the local tops, longing the local lows. Okay. That's what I do. That's my strategy. Okay. And then I always leave a little bit left within the trade just to see if that range is going, well, just to make the most of that range, because this range here, we're not going to trade this range for the rest of our life. Okay. This range is eventually going to be broken, whether that's towards the upside or towards the downside. I don't know. And I don't care. Okay, I'm just trading the range whilst we are within the range. Okay, that's what I'm doing. Okay, and that's what's worked for me in the past. So I'm going to continue to do that. At this moment in time, we have an 80% win rate from all of the trades that we've taken before Christmas. Okay. 80% win rate. That's a really, really good win rate. And I'm looking to continue that. And the way I'm going to look to continue that is to continue using the strategy that I have been using for the past, 3-4 months now, however long it has been. Crypto Forever 2019 had a long on OKX. 16,800 on 50x. Hope to exit at $19,800. Okay, well, I wish you luck with that trade. 50x, that's very high leverage. For me in a bear market, I never, ever go over 5x leverage. People who follow this channel have heard my story. I've wiped out 2 accounts by using just even 25x leverage. Wiped out two Bybit accounts by doing that. And then, my third account, I say third account, but third try of trading, I've been very, very successful because I've used very low leverage. Okay. And, I've just made consistently good trades. Yes, I've had a few losses here and there, okay, but the losses have been very minimal compared to the wins. Okay, with 50x, you're going to have a very big loss if it does go into a loss. So you've had a long since $16,800. So it's a very good long position that you've entered into. You've just got to look at the facts as well, though. You just got to be slightly careful there. RSI, just looking at one indicator here, RSI is overextended. Okay, when this has happened twice before, okay, RSI is above 70. You've got to be aware of this right now. Okay, RSI is above 70. The last time this happened, okay, back here on the 14th of December, and this goes for every single time it happens as well. Okay, not just these last 2 times or last 3 times. RSI, okay, over 70 right there in the overextended area. Okay, what happens? The price found a local top and we saw a pullback. Okay, you've got to be careful there because we're in the overextended territory now, and price is potentially forming a local top here. Okay, we can. Oh, what have I done here? We can go back here as well. Okay, initially here we found a local top, we've had a pullback, RSI was overextended. Okay, but we didn't get a major pullback. Okay, but then Okay, what happened is, again, we came up here forming a bearish divergence as well. Okay, RSI was just above 70. What happened? We saw a major pullback, a pretty big pullback. So you've got to be very, very careful if you are using high leverage like that in very uncertain times like this, okay? Because, you know, it's not looking very likely that this pump is going to continue. Even looking at that MACD, which I haven't looked at, okay? Jim told me to have a look at the MACD. I hadn't looked at that MACD in over a month, probably, okay? Maybe even longer than that as well. And that is even showing bearish signs as well. So you just got to be careful, you know? Indicators that I haven't even been looking at are telling me that the price is going to most likely pull back from where it is now. Another example right here, RSI overextended, okay, local top pullback, okay? So you just got to be very, very careful. If I was you, you know, I'll obviously not financial advice, but I'll be looking at taking some profits off the table. I'm moving that stop loss up to the entry point. Obviously, it's not financial advice, but that's what I would do personally because I'm seeing some signs that we are going to get that pullback. Now, if we are above your entry point, okay, tomorrow, and we see that core inflation rate year over year and inflation rate year over year comes in as forecasted, or even lower than forecasted, then you know you have one of the greatest long positions open right there, because we're most likely going to see that price pump. But you know, obviously not financial advice. That is not financial advice. You've got to be very, very careful. For me, I'd be looking at taking profits if I was in that trade. But yeah, you know, it all comes down to tomorrow. Everything that we are doing right now comes down to tomorrow. Okay, if it comes in as forecasted, if it comes in lower than forecasted, we're most likely going to see a pump within the markets. However, if it comes in higher than forecasted, then we're going to see a pullback within the markets, which is going to be very, very good for the short position that we do have open. Okay, so that's everything I've got for you today. I really hope you enjoyed this. Please make sure you head over to the Satoshi Society Twitter account and give us a follow there as well. If you're not subscribed to this channel, please make sure you subscribe, turn that bell notification on so you never miss any emergency videos, because of course we've got a trade open right now and I am potentially going to come out with some emergency videos if the price does decide to move, okay, either in our way or against our way, okay? So make sure you subscribe, turn that notification, press that notification bell, and of course, like this video as well. Solid win. Liked. Thank you for the content. I enjoy bringing this content, and you know, I hope it does help you out as well. All I ask in return is that you smash that like button. So thank you very much for watching, guys, and I will see you potentially later on today if there's anything to update you with. However, if not, I will see you at 1:30 UK time tomorrow when the core inflation rate year over year and inflation rate year over year comes out. I'll go live 10 minutes before, but initially, you know, that's when the next live will be. So thank you very much for watching. Smash that like button and I will see you tomorrow. Thank you very much.